Mastering Forex Trading, Tips and Tricks. Introduction to Forex Trading. Forex trading, also known as foreign exchange trading, is the process of buying and selling currencies on the global market. It has become increasingly popular over the years, attracting both individual investors and financial institutions. As a skilled SEO and senior copywriter, I understand the importance of providing valuable content that helps readers master the art of Forex trading. In this comprehensive guide, I will share tips and tricks that can elevate your trading skills and help you achieve success in the Forex market. Understanding the Forex market. The basics of Forex trading. Before diving into the tips and tricks, let's first establish a solid foundation by understanding the basics of Forex trading. The Forex market operates 24 hours a day, 5 days a week, and it involves the buying and selling of currency pairs. Major currency pairs include the euro to US dollar, pound sterling to US dollar, and US dollar to Japanese yen, among others. Understanding the concept of currency pairs and how they are affected by various economic factors is essential for successful trading. Market analysis techniques. To excel in Forex trading, it is crucial to develop analytical skills and employ effective market analysis techniques. Two primary methods of analysis are fundamental analysis and technical analysis. Fundamental analysis. This approach involves evaluating economic indicators such as GDP, interest rates, employment reports, and geopolitical events to forecast currency movements. Understanding how economic factors influence currency values is vital in making informed trading decisions. Technical analysis. Technical analysis focuses on historical price data, chart patterns, and various technical indicators to predict future price movements. Traders using technical analysis rely on charts and graphs to identify trends, support and resistance levels, and entry and exit points. Tips for successful Forex trading. 1. Educate yourself. To become a master in Forex trading, continuous learning is essential. Take advantage of educational resources such as online courses, webinars, and reputable trading books. Familiarize yourself with trading strategies, risk management techniques, and market psychology. The more knowledge you acquire, the better equipped you will be to navigate the complexities of the Forex market. 2. Develop a trading plan. A well-defined trading plan is crucial for success in the Forex market. Outline your trading goals, risk tolerance, and preferred trading style. Establish clear entry and exit rules and determine the position size for each trade. A trading plan helps you stay disciplined, avoid emotional decision-making, and maintain consistency in your trading approach. 3. Practice with demo accounts. Before risking real capital, it's wise to practice your trading strategies using demo accounts offered by reputable Forex brokers. Demo accounts allow you to trade in a simulated environment using virtual funds. This enables you to test different strategies, understand the trading platform, and gain confidence without the risk of losing money. Only transition to live trading when you are consistently profitable and confident in your abilities. 4. Master risk management. Proper risk management is vital to preserve capital and ensure long-term success. Never risk more than a small percentage of your trading account on a single trade. Implement stop-loss orders to limit potential losses and use take-profit orders to secure profits. A disciplined approach to risk management is crucial to withstand market fluctuations and protect your trading capital. 5. Stay updated on economic events. Stay informed about economic events and news releases that can impact currency movements. Economic calendars provided by various financial websites offer information on important announcements such as central bank decisions, employment reports, and GDP releases. Understanding the potential impact of these events on the market can help you make informed trading decisions. 6. Utilize risk-reward ratio. The risk-reward ratio is a critical concept in Forex trading. It measures the potential reward of a trade against the potential risk. By ensuring that the potential reward is greater than the risk, you can maintain a positive expectancy in your trading. Aim for a risk-reward ratio of at least 1 to 2, where the potential profit is twice the amount you risk on a trade. 7. Embrace a disciplined mindset. Successful Forex traders approach the market with discipline and emotional control. Emotions, such as fear and greed, can cloud judgment and lead to poor decision-making. Develop a trading routine, stick to your trading plan, and avoid impulsive trades based on emotions. By maintaining a disciplined mindset, you increase your chances of consistent profitability. Mastering Forex trading requires dedication, continuous learning, and the application of effective strategies. By following the tips and tricks outlined in this comprehensive guide, you can enhance your trading skills and increase your chances of success in the Forex market. Remember, Forex trading is a journey that demands patience, discipline, and a thorough understanding of market dynamics. With perseverance and the right approach, you can achieve your trading goals and outperform competitors.